Welcome to the TBS trading course. And in today's video, we're going to continue from where we stopped in the last. So in today's video, we're going to be looking at two major types of liquidity. So now I told you guys in the last video that you can identify liquidity, you can get liquidity from swing highs, swing lows, um equal lows, equal highs, and old highs and old lows. So but we don't really, that's just how to identify them. But we have two major types of liquidity. And the two major types of liquidity are, well, we have the buy side liquidity. We have the buy side liquidity, liquidity, also known as the BSL. That's the acronym. And we have the sell side liquidity, also known as the SSL. So the buy side liquidity is basically a liquidity that price clears in a buy side before becoming a sell trade. For instance, if price wants, for instance, when price goes to this zone, maybe you had a prediction that okay, when price gets to this zone, it's going to start selling. Now, price got to the zone, it did exactly as you predicted. Now, what happened? Instead of price to start selling, price cleared this buy side liquidity. Price has been buying for a while, so it cleared this buy side liquidity before selling. While the sell side liquidity is direct opposite. Is the liquidity that price clears after price has been selling for a long time before buying. Like the one that we used here in the last example. This one, price got to this zone, you're expecting price to buy. So but it has been selling for a while into this zone, and price came up, cleared this sell side liquidity before buying. So when you understand these two basic concepts, the buy side liquidity and the sell side liquidity, it will help you a lot to not get stopped out. um um it help you a lot not to get stopped out in your trade, at least to reduce your losing trades a lot. For instance, I won't, if I understand, because of the fact that I understand this concept to reasonable, should I say, to a reasonable length, I will not be looking for trades here. I would have waited for price to clear this buy side liquidity, because this is an equal high in the buy side. I'll be waiting for price to clear this buy side liquidity. Then I'll be looking for entries around somewhere here. We're going to talk about entries very, very soon. I'll be looking for entries around somewhere here. My stop loss above this liquidity that I just that this candle that price is to clear this liquidity. Now that I know my stop loss is safe, then I can now start selling to a very long distance. And as you can see, price ended up, if I had entered somewhere around here, price would have taken out my take profit and I'd have ended up making money. So now let's just look at a few examples on how to use the buy side and the sell side liquidity. Now let's just jump into other pairs. Let's check out the USJPY. Okay, as you can see in the USDJPY, price got to this zone. As price got to this zone, price created this liquidity. This is a series of equal highs. Um, I can just, yeah, this is equal highs. Don't mind the way I draw it, but it is just equal highs. Price created this equal highs. Some people would have sold right here. So, most basic price action traders would have seen this and sold right here to sell their stop loss few pips above this, then take profit down, 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 then boom, they'll have lost the trade. Price also created another equal highs. This is another set of equal highs. Some people might have sold after seeing this red candle. I think if you're using a double tops, if you're using a double tops pattern, you should have sold somewhere around here. Then if your stop loss is this wide, if you're having a 24 pip stop loss, then you might have ended up not losing. But as that, to me, that's actually a very, very wide pip stop loss. This is 24 pips. Personally, my stop loss, the maximum my stop loss can get is 15. I don't like trading anything max more than 15 pip stop loss. So if this person wanted to be trading like me, or let's say I'm not to take this trade with a 15 pip stop loss. This is 15.8. Let me even drag it down. 15 pip stop loss. I would have still ended up losing this trade. So, but if you had waited for price to clear all this liquidity and you got your entry somewhere around here or somewhere around here like I did in this trade, you'd have ended up making money. Let's look for other types. Let's try to identify liquidity in other places. Now, um, let's go to a bigger time frame. We said old highs and old lows. Let's look for old highs and old lows. As you can see, this is an old high. This is an old high. That's an old high, and as you can see, has come to clear the liquidity in this hold high. So what would I be waiting for? Since price has cleared this, and this is in the buy side, as you can see, price bought into this liquidity. Since price has bought into this buy side liquidity, what would I be expecting from price? I'll be expecting price to sell a little bit. It might not sell down to this area right here, and it could. But personally, I'm not really expecting it to sell down to this zone right here. Although I might possibly hold trades down to this side, but I'm not really expecting price to sell down to that side. But I'll still be able to get a reasonable trade from probably here to anywhere in between or to somewhere in between. But the fact is that, as you can see, price broke this old high because there's liquidity. A lot of people have placed trade somewhere around here, and they let's jump into a lower time frame to check it out. Well, now if you look at this very, very carefully, you're going to see something. We talked about how to identify liquidity, and we mentioned equal highs. Now, this is equal highs, equal highs. This is relatively equal highs. A lot of traders will have placed trades from somewhere around here. Then when I trade double bottoms, double tops, and reversal pattern, I'll have placed my trade somewhere around here. My stop loss somewhere around, let's say 15 pips, or 15 pips can't even work. Let's just say we trade. Let me just say 20 pips somewhere around here. Then my take profit down. As you can see, price respected my analysis. Price came into this zone and later sold. But the fact is that it took my stop loss out before selling. So why? Because price knew that there is a lot of the market makers, the banks, they know that there's a lot of stop loss and gain above this area here. So they took out this stop loss and generating liquidity to sell to the downside. So as you can see, price broke, took out this liquidity right here, then sold to the downside here. And don't forget, we are still price. This move here also broke the broke the old high, the liquidity in the old high for people who are having stop loss above that old high, which will even generate even more liquidity than price will end up moving to the downside. So um as an assignment, you guys should open your trading view to try to identify the buy side and sell side liquidity. And actually very, very easy to identify. As you can see, this is an equal high, relatively equal high. And let's not have an experiment right here. Let's okay, let's just use trend line from here to here. Then let's draw a line from here down. um all I'm expecting to see is for price to break this equal highs and retrace a little bit this buy side liquidity. Let's see what happens when price goes to this buy side liquidity. As you can see, when price broke this red dotted line, let me increase the opacity so you guys can see it. When price broke this line, that is this equal highs here, what the price do? It took out liquidity. Those people that are selling from here, those people that have sold from here, price took their stop loss, then sold. It took out the buy side liquidity, then sold before ended up buying. So let's check out another one for sell side liquidity. Let's check another one for just look for any place you see just look for any place you see equal lows. or swing lows. This is a very nice equal low. From here to here is an equal low. Now let's extend it to the present and let's see if price has gotten there. And let's see what price did when it got there. Okay, I don't think price has not gotten there yet. We are still expecting price to get there. Let's move to the back to look for something else. This is another equal low. This is another equal low. Let's extend it to the front to see what price did when it got to this equal low. That's what price has gotten there too. Oh my god, price hasn't gotten to that equal low. So let's check another pair. So this is not cherry pick. This is just I'm just checking different random pairs right now to look for um so any place in the market that's had liquidity in the past and to see what price did after clearing those liquidity. Now, for instance, if you look at this, although you can already see the result, I told you that you can also see liquidity in places that you see plenty weeks. These are weeks. So the whole of this place is actually a liquidity because a lot of and I said something in the last video that retail traders they believe that when you see a zone that's been tested multiple times, they believe it is very very strong. And as you can see, this zone has been tested. Yeah, we're still going to talk more about that in the in subsequent videos. But for instance, just take it like this. This one has been tested. It means that there's a lot of people that are bought around here because, for instance, look at it. Let's look at the sense behind it. Price got into this zone. Price got into the zone and bought. Came into the zone, bought again. Came very close, bought. Came into the zone, bought. Came into the zone, bought. Came into the zone, bought. What would you be expecting when next time the price came into the zone? You'd still be expecting it to buy. So it means that a lot of people would have bought somewhere around here, somewhere around here, somewhere around here, somewhere around here, or even in the future to somewhere around here too. And their stop loss is going to be somewhere around here. And as you can see, price came to clear those stop loss. So in short, liquidity is just an area where a lot of stop loss is residing. So price will just come to clear that stop loss and ending up. Don't forget the clear this sell side liquidity, then end up buying. When price clears a liquidity, it does not change its direction. For instance, you do not see price clearing this liquidity and end up selling. That's not clearing liquidity. When price clears liquidity, it clears liquidity and end up going in that particular direction as initially predicted. For instance, if price did something like this, if price did something like this, maybe you see price doing something like this, you are expecting price to buy, but instead it does something like this. Once you see these equal lows, you should know that liquidity is already residing somewhere around here in equal lows. So if price does something like this, let me say something like boom, boom, this is not clearing liquidity. This means your analysis was wrong because price just came. Maybe you bought around here. Maybe you bought around here and your stop loss was somewhere around here. This is not clearing liquidity. Price didn't clear liquidity because price just ended up continuously going down. But if you see something like this instead, price cleared this lows, hit your stop loss, and boom, this is clearing liquidity. Just like a fake move. Price went against the initial direction that you thought it was going and ended up moving upward. Or if you see something like this, then price first went up as if it wanted to go up, hit your stop loss, clear out many traders stop loss from here, then boom, this is clearing liquidity. It means that price has cleared both the buy side liquidity and the sell side liquidity. So don't forget one thing. If you want to understand liquidity, don't just forget this. I think I'll send a screenshot of this to your groups. Something of this, mm, something like this to better explain liquidity. Then we have something like we have liquidities like this, like they usually call it trend line liquidity. We also have the opposite. We also have something like this. And let's just forget about this last one. These are the four major ones that you should actually look at. I wanted to draw something that looks just like this, but let me just draw it. It looks something like this. We just have to look at it very carefully to know the difference. So we have something like this. This is liquidity, and we also have something like this. Let's explain. Here, price created equal highs and equal lows, or let's say relatively equal highs or relatively equal lows, equal. I think I have it on my template here, or I only have it as liquidity now. Equal highs equal highs, and here we have equal lows, equal equal lows. This should be black. Same thing happened here. We have equal highs, we have equal lows. As you can see, this stuff is bending a little bit just like this one. We also have, or let's just call it buy side liquidity. We have sell side liquidity. We have buy side liquidity, sell side liquidity. We have buy side liquidity. Sorry, sell side liquidity, buy side liquidity. We have buy side liquidity. We have sell side liquidity. This one, we also have, if you look at this very carefully, you see that price came to clear the liquidity at the top here. Price came to clear the liquidity at the top here, and also here price came to clear the liquidity, but the sell side liquidity at the lows, at this lows here. So after a while, you're actually going to be able to identify most of this stuff by yourself. So this is equal highs or buy side liquidity, equal lows or um, sell side liquidity, equal highs, buy side liquidity, equal lows, and the likes and the likes and the likes. So you have to be able to identify equal highs and equal lows. And don't forget, for you to identify liquidity, buy side liquidity is usually at swing highs, and equal highs. Sell side liquidities are, are usually at swing lows like this, swing lows, or equal lows or equal lows like this. So I hope this video has actually taught you guys a lot. So I'm going to screenshot this and send it to you. Should better your understanding. So an assignment is for you guys to go into your trading view, then like draw or plot, just open your trading view and start noting swing highs, swing lows, swing highs, swing lows, swing highs, swing lows. I'm going to show you how to do it in the Zoom meeting. That's if you don't know. But before the Zoom class, just open your trading view and start choosing swing highs, swing lows, equal highs, equal lows, and drop a screenshot in your group. Yeah, see you guys in the next video.